The story for the data here in the United States comes in like this. Initial jobless claims drop back to 239, as they always seem to do. They grind lower from a revised higher number previously of 252. So we're dropped from 252 to 239 and pretty much bang in line with the estimate of 240. Looking at durable goods orders, just a little bit of softness here coming through. Negative 1.2%. Previous month revised higher to 2.2. The estimate positive 0.3. So some weakness there. You back out transportation, it still comes in just a little bit weaker at 0.4%. The estimate was 0.5. Capital goods, looking at that story there, the headline number comes in at negative 0.5. The estimate 0.5. If you take out non-defense ex-air and all of that, it comes in at 0.4%. We were looking for 0.3. Alex, what are you seeing?
Yeah, the same kind of thing here, that U.S. business equipment orders fell in October. That's the first time in 4 months. You pointed out the capital goods. Capital goods shipments, though, looked towards steady investment growth, but it was really the business equipment orders. And what does that say about the CapEx story? Like, are you waiting for tax reform, or is this just an economic commentary, end-of-year commentary? We don't know yet.
Well, let's bring in Mike Ryan of UBS, shall we? What does this mean for the CapEx story, Mike?
Well, first of all, I'd be careful not to overestimate one number, but I think what Alex hit on is something we've been concerned about, is that the more there's anticipation of pending tax reform, the more there's a tendency to hold back on spending until you have certainty about what the tax code is going to look like and exactly what you're going to be able to leverage in terms of any tax arbitrage. So not that that's necessarily putting a freeze or a chill on CapEx spending. It's just that if you're on the margin, you're probably going to defer a little bit until you get greater visibility on it.
Do you wind up getting faster pickup then? Because there is a concern that if you wind up being able to deduct your expenses right away, that all of a sudden in 5 years you're going to deduct a lot and buy stuff you don't necessarily really need. Just put forward that investment.
Well, first of all, I'm not sure they won't buy things they don't need. I think what they'll do is they will certainly, if they're planning any investment spending, what they could do is pull it forward, because there's an incentive now. There's certainly a tax incentive to do that. So that's something that could certainly spur a boost in capital spending in the near term.